Good morning, Trinidad and Tobago, and welcome once again to Bourse Report. Today, I intend to cover performance of the markets across the world in terms of equities and bonds, the US market, the world regional markets generally, what's happened with the bond market, as well as what's happened and what are the expectations for US interest rates, because those rates have great effect upon what happens with world markets. But before I do, investors have been asking me how they can participate in these world markets, or are they, and some are saying they may be too small to participate in these world markets. The answer is that you can participate in the world markets as a small investor through the various US dollar and other hard currency denominated funds that are being placed in the Trinidad and Tobago market. So just for a couple thousand US dollars, you can actually participate in that market. Let's turn now to the first graph, which is the performance of the US equity market. The US equity market, as you would see on the screen, at the beginning of the year, the markets fell some 10.5%, but has recovered to the extent in the US market by the S&P 500, an indicator of that market, to 2.6%. So the markets have regained ground. And as you come back to me, the question is, why have the market regained ground? Well, first of all, the expectation of interest rate rises in the US by the equivalent central bank or the Fed has not materialized, and it is being delayed because of world economic conditions and market conditions in the US in particular. For example, the jobs report, which came out recently, underperformed expectations as to where those jobs would come from. So let's turn now to, we looked at the US market, let's turn now to our second graph, which it shows what has been happening in the world markets. Example, Europe, Latin America, Asia. And we've spoken about the US markets, but surprisingly, the best performing region in the world as we approach the half year has actually been the Latin American market. And of that, included in that, of course, will be Brazil, Colombia, Peru, Chile, Mexico. How can you participate in that market? Of course, we have a Brazil Latin fund, which is marketed in Trinidad and Tobago, performed very weakly in terms of the past year and a half, and is starting to come back with that kind of performance. Asia, up 1.6%. Usually that is a better performing market, but not so this time around. Europe, the sick man of the world, is down 3.3% thus far this year, and overall the world is about 1.6%. How are other markets performing? Other markets, such as the bond markets, will essentially have recovered considerably and are performing very well. Remember our mantras about your investment strategy. You are a world citizen, and therefore you should participate as best as you can in terms of world investments. But let's look at the bond market performance. Up 7.5% since the beginning of the year, and this is a very good return. We have been saying to our investors, and you would have seen on that graph, you will see the progress in terms of the market dipping down a bit in the negative territory and going up to 7.5% as we speak now. Now, as I was saying, the strategies about investment clearly should include diversification across the space in which you want to invest. We have said before, our investment mantras are diversified by asset class. No sense being short only in bank deposits and money market. You have to go out longer to get better rates. And let me turn now to essentially the fourth graph, which of critical interest is when and by how much will the Fed in the US raise interest rates. And this graph simply shows the probability of interest rate increases, whether it is at the July meeting of the Fed, September, November, or December. And basically for September, November, there's a 1 in 3 chance of that increase in the rate to the 50 odd basis points, and increasing further in December. What it all means? It means that the last year the markets were terribly roiled by interest rates expectations and the movement of interest rate, causing markets to go down precipitously from September, October until January, February, and they have come up now. How do you participate? As we said, for the smaller investors, go to mutual funds. Just a couple of $1,000s will get you into those funds. But as you go to more significant amount, you will have to go to your broker, to your investment advisor, to get better information as to what to invest in, why. Investors in the bond space have done very well by Petrotrin bonds, by Trinidad and Tobago bonds, 2024 bonds. Find out more about how to invest in these areas via mutual fund or via direct investment. Have yourself a wonderful investment week, and look for us in the newspapers for much more detail. But look closely at boursinvestment.com to find out and to get much more details about what's happening with investments around you and how you can benefit from those investments. This is Subhash Ramkilawan for the Bourse Report.